March was another good month for markets. Equity markets up somewhere around 3%, depending on the region. Fixed income bonds also positive, somewhere around 1%, even though there was lots of chatter about interest rates. And also commodities maybe stole the show with oil, gold, silver, all positive. Dean, lots to talk about. As we do in the first episode of every month, we look at the key themes that have driven markets in the month that's been. As I say, March has been a positive month. I mean, what are the key themes that have driven those returns I just talked about?
Thanks, Shane. I think theme 1 is interest rate cuts eventually. Theme 2, equities have been strong and it's not all about technology. And 3, commodities are shining.
Commodities are shining. Okay. Interest rate cuts eventually. I mean, a lot of us expected that we may have seen interest rate cuts already. Towards the end of the year, we were talking about interest rate cuts in March. We're still sitting here, no interest rate cuts in the US, Europe, the UK. What's the latest?
Yeah, you're absolutely right. End of 2023, we should have, well, we were forecasting and pricing in interest rate cuts by March. Now, based on today's expectations, we may not even see an interest rate cut in June in the US. Markets are pricing that at about a 50% chance. Similarly, Europe expectations have been pushed back there as well. They're potentially looking most likely to cut interest rates first, so a higher probability of a June interest rate cut. And in the UK, somewhere between the two. Now, the reason for that delay is principally down to 2 factors. So inflation has proven to be stickier in a number of areas, particularly in the services sector, particularly in wages. And second, economic growth has been stronger than expected.
Okay, and I mean, on that economic growth point, because moving on to the second theme of equities, they have been strong, they have been resilient. Is that linked to the point that economies are maybe being a bit more resilient than expected?
Yeah, you're quite right. So I mentioned that the main story wasn't all about technology. The story is really now about other sectors and regions starting to play catch up. And as you say, that kind of reflects the improved sense of expectations around what global economic growth might do over the course of the balance of this year. So, for example, European equities outperformed the US, and from a sector perspective, banks and materials were the top performers. Those are quite economically sensitive sectors, as you can imagine. Now, as a team, this is something that we were hoping for, and it's almost a prerequisite, really, for a broader base rally that can give you some confidence in the durability of market performance looking ahead. It could be an indication that the market is starting to price an improvement in global economic growth expectations. That's probably a little too early to say.
Okay. And then theme number 3, commodities. You said commodities are shining, I think you said. I don't know if that's a pun on gold and silver, because I'm looking at the list here and they're top of the list in terms of returns. Why the rally in commodities?
Yeah, I know you love a stat, and gold gave us its strongest monthly return since 2020 in March. It was up over 9% in the period, and I think silver was a little better. Other commodities have also bounced, so I mentioned silver, but also copper and crude oil all posting strong gains. Another theme with 2 key drivers. So the commodities that are broadly used to make stuff is often referred to as industrial commodities. So that's your copper and your crude oil. They've been helped by that stronger economic growth story that we were just speaking about. Copper in particular, potentially improvements in China. While for precious metals like silver and gold, the rally has been potentially more a reflection of continued fears around inflation remaining high, kind of playing back to that interest rate expectation point. And should the Fed start cutting rates whilst inflation is still high, you end up with commodities like gold and silver being viewed as maybe a better long-term store of value than something like cash.
Okay. I mean, you put all that together and you've got a pretty good backdrop in the month. Equities performing well, bonds pretty stable, notwithstanding all the noise around interest rates, and then finally you've got commodities performing well. You mentioned that I love a stat. I do indeed, Dean. We usually finish the monthly episode with a stat of the month, and your stat on gold was good, but I've got a better one. I think it would be remiss to not talk about Bitcoin in a month where it hit its all-time high of $73,000. It fell back a little bit, I think, trading at around $66,000 now. But if you put all that together, from the start of the quarter to the end of the first quarter, you're talking about a 67% return for Bitcoin. So whether you love Bitcoin or you hate Bitcoin, it can't be ignored. It is continuing to get some of the headlines, and we covered that on an episode earlier in the month. Dean, that's been great. A whistle stop tour. I think we've covered all the key themes. We will be back next week. We will put a fund manager on the spot. We look to do it all in around about 5 minutes. Until then, take care.